you think is going on here?
Were you shocked by the headlines? Well, don't be shocked. Any real estate market or any consumer market is driven by buyers. If buyers don't have confidence, they're not going to buy no matter what you're selling. Right now, buyer confidence is high. We're looking at credit scores that are way above 700 for people that are wanting to buy. And with the market being in a transition right now, it's a great time for buyers to buy. What we're seeing out there and what has been talked about a lot is interest rates. Well, what they don't tell you is they're focusing on the Bank of Canada and the Bank of Canada prime rate. As we can see from the graph, the Bank of Canada prime rate has gone up and it's gone down. And it's at a historical average right now. But what they don't tell you is that the 5-year mortgage rate is actually set in the bond market. As we can see by looking at the chart in the bond market is in a typical cycle where it's an average of where it's been over the last 10 years. And with all the fixation on what's happening with the prime rate, did you know that actually that 5-year fixed rates are less than the mortgage rates? Right now, the current prime rate is 6.45%. And an adjustable variable rate mortgage is at 5.45%. And a 5-year fixed rate mortgage is at 4.79%. So clearly, when you're listening to all the hysteria around the mortgage rates, remember the 5-year mortgage rate is set in the bond market. And the bond market is totally different than the prime interest rate market. The prime interest rate market is the market that the Bank of Canada actually lends out money at. And the bond market is the rate that the Bank of Canada actually lends money out at. And the 5-year fixed and the 10-year fixed rates are depending on the 5 and the 10-year bond rate. If we look at a 12-year chart, you can see that we're in that typical range where we would be normally for a 5-year fixed rate mortgage. What's happening, and this is really affecting the market, is a lot of people out there that we've been talking to, they say, we love our mortgage. Well, of course they love their mortgage. They're at 1.5%, 2%. And when they love their mortgage, they're not going to make a move. So now we've taken those people out of the market. Now, a lot of those mortgages are going to be coming up in the next 2-3 years, in 2023 to 2024. So that will affect the market, whether it's those people are going to have to be selling their homes in order to be able to stay there, or if they're now actually going to say, well, you know what, we have to make a change, so why don't we buy up as well? With prices down and the difference down, it may be a good time for them to buy a larger home as well. Right now, it's estimated that there's $250 billion in Canada in adjustable rate mortgages, and there's $160 billion right now in fixed rate mortgages. So when those fixed rate mortgages come up, the shock to those buyers that had bought with a fixed rate is not going to be nearly as much as the shock to those people that have bought with a variable rate mortgage. And as we can see from looking at the chart, inventory actually has gone down. And typically when we have low inventory, we have prices that go up. Now, in this case, we have low inventory and we have buyers that are cautious. Because what has alarmed the market this year is the speed of change of the market. We've seen just a dramatic decrease in the value of homes over the last 9 months, from March up until the end of the year. As you can see from the graph, we're back down into what I call a balanced market, where 16% of the listings are selling. If you look at the peak, we were well over 90% of the listings are selling. So we're in more of a balanced market where we have sellers that are able to sell and we have buyers that are able to buy, and they're negotiating. There's no more 10, 12 offers, all cash offers on properties like there once was. We can see from looking at the chart of what's happening across Canada, we see that there's been probably some decreases. Most of the provinces, with the exception of Saskatchewan, Labrador, Newfoundland, which are expecting some slight price increases, are going to see some slight price decreases through the year all across Canada. And average in BC year over year at 3.75% decrease from last year at this time. If we look at the number of transactions year over year, you can see that we're down 37% from 2021. Now, 2020 and 2021 were anomalies in the market. So 610,700 sales, we're back to what has been a historic average. And the average sale price in Canada is down 9.9% year over year, with $643,000 being the average sales price across Canada. Now, if we take out the Vancouver market and the Toronto market, that drops the average by $150,000. And we can't forget about immigration. Our government has set targets for immigration. For 2023, they would like to have 465,000 new people come to this country. For 2024, 485,000. And in 2026, 500,000. All those people have to live somewhere. So just think about what that's going to do to the housing market. Of course, with lower inventory and more people coming into the market, we're going to see prices moderate and come up slightly. And realize that the market is cyclical. It always has been and it always will be. If you look at the chart, we can see over the last 7 years that there has been 2 cycles where we've had prices actually come down. And the average time for those cycles was 16 to 18 months. So based on that average, we're probably going to see prices flatten and be at the bottom in anywhere from April to July of next year, based on that 16-month cycle. And if we look further out from 1979 till today, you can just see that we've always been on a steady increase. This has been the largest drop that we've seen in the last, since 1979. But we can see that prices have always come back up from where they are. So the only time, and I tell my clients, the only time that you're going to get hurt is if you have to sell sometime during that 5-year period, even if you bought at the peak. If you bought at the peak, which was March of 2022, and you had to sell in the next 5 years, you're definitely going to have lost some of your equity. But if you don't have to sell before 2027, you're definitely going to be back up to where you were in 2022 or even higher. So the outlook going forward for mortgage rates, I believe, is Q1 and Q2. We're probably going to see 25 to 50 basis points increase, and for the rest of the year, probably flat. We're looking at inflation being semi-under control, and I don't believe that the Bank of Canada is going to be raising interest rates more than that. And I believe that in 2023, we're going to actually see rates go down anywhere from 25 to 75 basis points. As far as housing sales and prices, I believe that this year we're going to see about a 7% increase in sales, and we'll probably see the prices being very flat throughout the year. For 2024, I believe that we're going to have about a 10% increase in sales, and we'll have about a 5% increase in prices. And if you would like a full copy of this report, please click the link below, and I'd be glad to email it to you.